Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NVIDIA Corporation quarterly report. NVIDIA Corporation offers a diverse range of businesses and services across various markets. The company's key offerings include graphics solutions for gaming and PCs compute and networking solutions for data centers and artificial intelligence applications, automotive platforms for autonomous and electric vehicles, cloud computing services, including DGX Cloud and GeForce Now game streaming service, virtual GPU software for cloud-based visual and virtual computing, Omniverse software for building and operating industrial AI and digital twin applications, customized agentic solutions for enterprise AI adoption. These products and services cater to various industries, including gaming, professional visualization, data centers, and automotive markets. The company sells its products to a wide range of customers, including original equipment manufacturers, system integrators, cloud service providers, and consumer internet companies. NVIDIA's stock price surge. A year of dominance and innovation. In the past year, NVIDIA's stock price has experienced a substantial increase of over 34.83%, driven by its dominant position in the artificial intelligence, AI, and data center markets. Several key factors have contributed to this surge. AI and data center leadership. NVIDIA maintained its leading position in AI processors and data center platforms, with its GPUs serving as foundational hardware for advanced AI training systems. Surging demand for AI GPUs. High demand for NVIDIA's GPUs, particularly for generative AI and supercomputing applications, drove the company's growth. Innovative technology. The introduction of the Blackwell chip architecture in March 2024 generated immense demand, with reports indicating that the entire 2025 production was already sold out. Record financial performance. NVIDIA consistently reported strong financial results, including record revenue and data center growth. These factors, combined with strategic partnerships, global expansion, and a positive analyst sentiment, have propelled NVIDIA's stock significantly upward. The company's future product roadmap, including the Rubin architecture in 2026, is expected to double performance and justify premium pricing. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increasing demand for data center segment, graphics segment, and gaming segment. The growth in these segments is attributed to platform shifts, strong demand for Blackwell Ultra architecture, increased adoption of NVLink compute fabric, and the growing popularity of NVIDIA's products in the data center, computing, and networking segments. On the other hand, revenue decline is primarily driven by diminished demand for H20 product due to new export requirements, impact of open-source AI on proprietary products and services, and export controls negatively impacting demand for NVIDIA's products and services in China and other markets. Net income experienced a significant increase of 65.1% quarter-over-quarter and 52.2% year-over-year, rising from $19,309 million in 2024 to $31,910 million in 2025. This growth can be attributed to various factors. Despite profit margins showing slight decreases for both periods, net income has increased substantially. The gross profit margin decreased by 6.3% quarter-over-quarter and 48% year-over-year, while the operating income margin rose by 64.5% quarter-over-quarter and 51.4% year-over-year. The decrease in gross margin is attributed to a transition in business model and improved mix and cost structure. Conversely, operating expenses increased due to compute and infrastructure costs, higher compensation and benefits, and engineering development costs. The company is indeed generating positive operating cash flow, as evident from its net cash provided by operating activities. In 2025, this figure stood at $66,530, a significant increase from the previous year's $47,460. Furthermore, an analysis of the first 9 months of fiscal year 2026 reveals that operating cash flow has continued to rise due to higher revenue, indicating a positive trend in the company's financial performance. The company's debt level and interest expenses have undergone significant changes. Notably, short-term debt has skyrocketed from $0 to $999 million, indicating a substantial increase in the company's short-term liabilities. Conversely, long-term debt has decreased by $1,005 million, suggesting that the company has managed to reduce its long-term obligations. However, interest expenses have remained unchanged at $61 million for the 3 months and $186 million for the 9 months ended, indicating stability in this financial metric. Overall, these changes suggest a shift towards more short-term liabilities and reduced long-term debt, with no significant impact on interest expenses. Management is optimistic about the company's outlook, citing several key points. Firstly, they expect cloud service agreements to support research and development efforts and DGX cloud offerings, with substantial manufacturing production commitments through 2027. Additionally, data center revenue is expected to continue growing, driven by future leases worth $7.5 billion between FY 2026-2030. The company is also investing heavily in strategic partnerships, committing up to $10 billion in Anthropic and entering into a letter of intent with OpenAI. Furthermore, management expects to increase U.S.-based manufacturing to strengthen the supply chain and meet growing demand for AI infrastructure. However, management acknowledges that macroeconomic factors such as tariffs and inflation will continue to impact the business, and that demand for products can be volatile due to various factors. Despite these challenges, the company remains committed to investing in its future growth and development. The acquisitions and divestitures made by the company are significant milestones in its growth strategy. On the acquisition front, the company has shown a keen interest in investing in cutting-edge technologies through various deals. Notably, it has entered into a letter of intent to invest in OpenAI, while also making a $10 billion investment in Anthropic subject to closing conditions. Additionally, it has acquired Intel Corporation pending regulatory approval and Mellanox at an unspecified date. Furthermore, the company made a significant acquisition on August 6, 2025, worth $17 million. On the divestiture side, the company has taken steps to distance itself from Russia by closing business operations in the country and stopping direct sales. These strategic moves reflect the company's adaptability and commitment to navigating complex market dynamics. The company has a history of paying dividends and buying back shares. Dividend payments have been consistently recorded across multiple pages, with notable amounts including $243 million in Q3 2026 and $732 million in 2025. Share buybacks have also been documented, with significant figures such as $36.7 billion in the first 9 months of FY 2026 and $25.9 billion in 2024. Concerns about inventory buildup and supply chain disruption are evident in the recent data. Inventory levels have increased significantly, with a $9.74 billion rise from January to October 2025. Excess inventory purchase obligations also rose by $675 million during this period. A $4.5 billion charge was associated with excess H20 inventory in Cone FY 2026. Supply chain disruptions are also a concern, driven by long manufacturing lead times, up to 12 months, uncertain supply and capacity availability, and mismatches between supply and demand. The uncertainty surrounding new export control rules and rapid evolution of global trade policies may further disrupt supply chains. That concludes the financial summary for NVIDIA Corporation. Feel free to comment below, and I will be happy to answer them when possible.